What's going on, guys? Welcome back to the channel. In this video, we're going to be covering the only strategy you need in 2025 to become profitable and to get consistent payouts. Now, the strategy that we're going to be covering today is going to be over Asia session. And using this simple Asia session strategy, I've already been able to get funded another 50K with my funded futures. And I've also achieved my 5 winning trading days needed to actually get my first payout with this account. Now, before I jump into the video and show you how these setups work, keep in mind all the trades have been taken live in our free Discord in the Trade and Chill channel. Always tune in to come join us and you can catch these plays for free. So if you haven't already, make sure you click the link in the bio to join the Discord so that you can catch the next Asia stream with us. Alright, so we're going to be covering these two setups from the past 2 weeks on gold. One of them went a 1 to 15 risk to reward. The other one went to 1 to 3 risk to reward on the future side. On the forex side, actually continued for a 1 to 9 risk to reward, as the pullback wasn't as steep as it was on the future side. Same entry was taken at the same time. Price action on these pairs have been a little bit different, something you guys can notate. But the main thing that I want to point out to you guys is with utilizing this strategy, whether you want to go just strictly for 1-to-1 in liquidity areas, or you want to go to a 1 to 3 risk to reward, or you may be wanting to find a couple good swing trades for the month, you can definitely utilize this session, because we have to come to the understanding that a lot of times what we're going to be trading here during this Asia session is the actual opening hours of that daily candle. So you may catch the actual high or low of day or potentially of week. As you guys can see, the setup that we caught on Tuesday, January 14th, would have never came back and would be over a 1 to 30 risk to reward with the high that created and put in here on Friday, January 24th. So that's just something to keep in mind as far as your trading style. You can use any risk management plan utilizing these setups. It doesn't have to be the 1-to-1 or just the liquidity targets. It's all depending on what works best for you guys. But either way, consistency is key. So I'm more so aiming for liquidity targets and lower hanging fruit. Now, before I jump into this strategy, I do have to give credit where it's due. Shout out to Charmaine Trades for actually putting a video out about the Asia session range and helping me to understand it a little bit more clear as far as liquidity. So if you guys remember in our videos for TJFX, we already used London lunch liquidity and we use the Asia liquidity during Asia session. But with this strategy, the main thing that we want to focus on, first hour of the new day opening candle. Now, what this is going to tell us is basically mark up our range of liquidity the same way we mark up our London lunch liquidity when we're trading New York session. If you haven't watched those videos that we put out on our London lunch liquidity, definitely go check them out on our channel. So once we mark up this high and we mark up this low, this represents both our buy and sell side liquidity. Now, if we're overall bullish on the day, we would like to see that sell side liquidity taken, wait for our transition and entry principles that we teach in TJFX, and then look for that continuation right back to the upside. But the main thing with this strategy that you guys have to understand is order flow. If you don't understand order flow, you're going to just take any direction after the liquidity grab, and that's definitely not how you want to trade gold in this fashion. Taking it a step back here, we got that hour open, but let's actually jump into a little bit of the order flow before we dive into the actual entry. We want to start on that higher time frame. So before this candle, this is the actual candle that we're going to be trading here. Now, before this candle opened, we can see price action on the daily time frame had been continuously trading bullish. We see buy side volume imbalances being printed here as well as the new days are opening. So creating new day open gaps to the upside is also telling that price action is very bullish at the moment. H8 time frame, we can see price action has been consistently bullish. We started a retracement and we create a sell side imbalance. Now, one thing we can notice is as far as our short-term low, we have not closed below that short-term low. So we do not have confirmation even on the H8 time frame of a bearish switch just yet. This is that daily bearish engulfing candle. Because we did not take out that short-term low, this does not give us that confluence of the actual order switch based off our macro here. Now, looking at the 3-hour time frame, we can see price action did create a sell side imbalance, ran out short-term lows. But in this case, we just want to keep in mind when we have a day where price action is potentially starting a switch where we start to see it there on the 3-hour time frame, we still want to keep in mind what is the 8-hour doing, what is the daily doing. Those are still going to drive the higher perspective of what the market is looking to achieve. So if my daily time frame still screams to me that price action is still bullish, H8 time frame, price action still bullish. We're just within the range of the last pullback. So even if we measure this from the low up to the high, we can see we came right around equilibrium of this current leg of structure. So we want to be careful just taking continuation sales. We want to get that confirmation with the H8, with the daily. That should give us all confluence on where the market may actually be looking to trade. And since gold has technically been bullish for so long now, we can expect a chance of potential higher prices when that order switch does happen. We also did print a nice bullish order block. That also gives us confluence of potential higher prices, seeing that we printed that on the H8 time frame. Now, if we jump back into our setup, again, we have our buy side and sell side liquidity marked. We want to see sell side liquidity taken when we're looking to buy. We want to see buy side liquidity taken when we're looking to sell the market. Now, if we drop down here, we did get some runs of short-term highs here. We did create a small buy side imbalance, but as soon as we tap the bottom of the range, we got sell side continuation. So at this point, no setup for us. We're just waiting. Another thing that we can also do to build and add confluence is look on our 15-minute, 5-minute, potentially 1-hour time frame. Do we spot any liquidity that price may be running toward, or do we spot any imbalances that price may be looking to test? That'll give us a reason or confluence to figure out, okay, well, if price is breaking past the level, where may it be trading to next? Now, we have that buy side imbalance here on the M15 that we can see. Price traded into about 50% of it. So from this point, we can start looking for potential rejections, or again, we can look to see areas of liquidity. We have bullish, bearish, bullish continuation order blocks printed here as well. Buy side imbalances printed as we take out highs after this 2 candlestick pullback. So once we run out that high, we may use this previous level of supply as support to continue higher. So now we build confluences at these levels. So don't think of this strategy as, oh, just because it ran liquidity, I'll take the trade. It is very simple, but you want to build confluences on first, that overall order flow, second, getting your range, and then third, where else will price want to potentially run to. So now I have the run of my liquidity to the downside. Now I want to see where may price reverse from. Now if I drop down to the 1-minute time frame, and let's just play this out further, we see price first spike above this high, buy side imbalance print, but we pretty much created a volume imbalance as price came back and retested. So this is not a strong confluence just yet of an actual order flow switch. And we can see we are still respecting the low of that range and getting rejection. We want to start to see price close above it and maintain above it. Now we also get the run of a short-term high here as well. And we still see rejection in this area. So as you guys can see, we start to get an order switch again here. We see price continue to fail at that low of the hour range. This is telling us price action is still bearish. If price was willing to go bullish, we would see buy side imbalances respected, retested, and seeing continuation back through this low opposed to rejecting it. Now we can also see we inverted that 15-minute buy side imbalance here. So we do have this bullish order block on the 15-minute time frame. So now that we're back in this range, this is more confluence of where price may want to test into. If we check out the M5, look deeper, we can see within that 15-minute bullish push, we also have a buy side imbalance here on the M5. So at this point, we can get rid of this. We have this imbalance here that we're working with. We know we're inside a 15-minute bullish order block. All using this as confluence of if price would want to reverse from here, we should see a reaction from it. So if we play price forward here, we continue down lower, basically into the low of that range, and we can see we start to get a nice impulse. So now notice we start to run out highs again. Sell side imbalances being inverted, buy side imbalances being printed so far, respected, price not even reaching back into them, just continuing higher. So at this point, this is where I actually took a trade after we formed 2 buy side imbalances and price did not reach back into them. We just seen further impulses. So I was expecting more of a bullish continuation at this point, So this is where we actually took that entry, and this was right at 9 o'clock. So anybody working, of course, 9 to 5, this is going to be the perfect setup for you this year, because this will allow you that freedom to be able to trade after work. You don't have to work around a schedule or have to stay up all night to try to trade London session. Now with that follow through, we had about a 30 pip stop loss. Our overall target is going to be that buy side liquidity. We took out the sell side, so we're aiming to take out the buy side. So this is where the difference in ranges is going to come from as far as your target. So let's say you are just a scalper, or you are just looking to get in and out of the market, and you want to go for 1-to-1, the simple target. That's very achievable, just aiming for the liquidity of these highs built up during that Asia range, or just basically into that first hour, about 15 minutes after Asia, we built up around this point. Definitely liquidity that could be taken there. And with how this candle formed here, basically at the open, we can actually measure this out as well. We can trade to 50% of it as a potential partial level. So when we're considering this setup, we're not thinking that every time we enter into the market, it has to be the low or high of day, low or high end of week. Now, of course, you can shoot for that on every single trade, and you may catch 3 to 4 a month or something like that. So far we've caught about 1 a week, where we have one of them being that 15-hour trade and the other one being that 9-hour trade. So in this case, this target just over a 1-to-1, this mid target here 1 to 2.7, we have another one here 1 to 3.8. So if we play price out here, see price stab back, we hit those targets very easily. Looking to the left, we were aiming for these highs back up in this area where we have equal highs, just to play price forward for you guys. Took a little bit of time, but of course, if you're trading a Forex account or Forex prop account, this could easily be a nice hold. It took us from 8 o'clock on Tuesday all the way up to Thursday at 4 a.m. I held this trade up until like late London and took my positions here just because of the fact that the next day was CPI, and I would technically be breaking a rule having an open trade before CPI on my funded account, which I did not want. But luckily on my Forex account, I actually still had this trade running to go to the extended target. So that's just something to keep in mind, and remember profit rules. But of course, if you're trading personal capital, you don't have to worry about that. But you can definitely swing some nice positions, as you guys can see. Now I'll show you guys one more setup. The setup will be the same. When we do catch more sell setups, I'll show you guys those as well, which we probably will this week, as we've been seeing some more seller pressure coming to the market. If we move this forward here, we can see price action is starting to break down again. So if we look at the 3-hour time frame, we have left head, right shoulder. We do have a bearish quasi, run of short-term lows, sell side imbalance. So our first thing that we want to ask ourselves when this happens is price action bullish or bearish? So if I see a 3-hour start to transition, I want to check the H8 and daily time frame to make sure that we're not at a key POI, because that would transition us right back into the overall higher time frame order flow. So if I'm looking at this from the H8 perspective, I can see we have a buy side imbalance that was printed here, and we can see price close through it, and now we're trading right back into it. We took the liquidity as price tested into this imbalance range. We started to see rejection, and I can also use my fib to see from this last 2 candlestick pullback up to this current high, where will we be sitting at as far as price. If I take this up here, you can see we perfectly tested that 50% of that move. So I'm going to be more cautious to just lead straight into sales here, because I see how price reacted, strong order consumption wick. So the choice is either I sit on my hands to see if price has bearish follow through, or I take advantage of this move here. So I'm still currently bullish here. Here's our 6 to 7 p.m. candle. So again, that first hour of Asia session, we're marking up the high, and then we're marking up the low. We want to see sell side liquidity taken because we're overall bullish. If we were bearish, we would want to see the buy side liquidity taken. Now in this case, we can see we ran out that buy side first, which could have been a quick sale. Understanding the overall higher time frame order flow will put you in the highest odds. Now, if we look at the 1 hour, we also have an order block that was printed here that price is testing into. Looking at the 15-minute time frame, we can see we started at left head, right shoulder, bullish quasi, starting to see some order consumption here. So as we enter into that 1 hour order block, and we can look to see, is there any imbalances, any levels of liquidity? So we can see liquidity underneath this low. We can see this one was taken here. So with this liquidity taken, we can start to look for potential entry. So this is around 7:59, 8 o'clock here. As you guys can see, we run out short-term highs, buy side imbalance printed here. And then we start to get follow through after we retested it. Another buy side imbalance printed, showing more follow through. So with this one, because we were actually trading so close to the low, I did wait to see actual open and close above and wanted to see that buy side imbalance print, which we got. So my entry was here, stop loss below this imbalance, which was around 50 ticks. So generally stop losses have ranged from 25 to 50 ticks. On these setups, we can see here right at the highs, we got a lot of liquidity built up from that first initial raid and run lower. So aiming for this high as far as the target, or even just the liquidity high again. With these setups, I would encourage at least a 1-to-1. So just getting above that gives us a 1-to-1. And of course, with these setups, guys, the bigger the range, the higher the risk to reward is going to be. Now we also have a sell side imbalance here to the left. If we look closely on the 1 minute time frame, and then we also have these highs built up in this range. So a lot of different confluences in this area. If we play price out here, see we got a nice run higher, hit that 1-to-1. We stretch this out, go to a higher time frame here. You can see we actually came up to this high, started moving sideways. So this got us right to a 1-to-3 risk to reward before price action actually started to see that reversal. If I hit play here, as you guys can see, we started to come back down deeper, had a steeper pullback on the futures chart. But if we look at the gold chart here, this was again that same setup that just gave continuation. So this pullback from that same entry area, the steepness of the pullback or the price action has been a little bit different. So keep that in mind if you guys are going to be trading both Forex and futures with the system. But you can still get nice risk to rewards past these challenges, guys. You can trade, of course, after work. We will be trading live on the Trade and Chill channel in the TGFX Discord community. So make sure you guys tune in. And then, of course, we got the live trade room back running during New York session starting at 8:30 a.m. EST. So if you guys got any questions on the Asia stream or any comments, make sure you comment down below, like, share, and subscribe. And as always, invest in yourself. And I'll see you guys in the next video.